Much and welcome Neil and Aparajita to this session, and thanks for having me moderate. Neil, as most of you will probably know, but I'll repeat it, he's a deputy editor at Mint. He takes care of the personal finance section, and he's very vocal on Twitter, and of course vocal on his articles that go in Mint itself. And Aparajita is a freelance journalist. She writes for both Mint and Fortune and Outlook Money and a few other publications. So, firstly, welcome, and a warm welcome to all of you also. My name is Deepak Shenoy. I founded a company called Capital Mind. We do wealth management and run a PMS in HSR layout in Bangalore, which I know from here is a different city, but. But yeah, so I know they've come. I mean, it's rude to talk about Bangalore traffic from people who come from outside, but
especially from Mumbai.
From Mumbai, oh yeah, of course. We always have a fight about who has the worst traffic, but they win on the roads. We just
don't exclude Delhi.
Delhi. we don't talk about Delhi infrastructure in Bangalore. It's not allowed. Okay. So let's start with the first. So I have a bunch of questions. I'm sorry, but I'm just old, so I'm going to have to read the questions out that I have just written about 15 minutes ago. But I'm going to ask questions of both of you. I think one of the things that I read the book, and I'm a big fan of Rakesh myself. He's the Indian Warren Buffett, if you may. But he's also inspirational from the fact that he came in from a relatively smaller background and brought in. There's so many things about his life that has inspired me. But I want to ask you guys this. What has inspired you more? And maybe Neil first, and then Aparajita next. Is more about what has inspired you about Rakesh's life, and you probably learned quite a bit in the process of making the book as well.
Yeah, hi everyone, and thank you so much for coming. So there are essentially two things about Rakesh that stand out to me. One is his incredible patience. So many of you might have heard of this anecdotal story of him buying Titan 2002, which made most of his fortune. But we found a report in Hindu Business Line by a Titan executive which spoke about him being an investor in Titan in the way back in the 1990s. And in the 90s, Titan was not going anywhere. It had a foray in Europe, it was not doing jewelry, and he still stuck on. So he was more patient than we think, even more than the anecdotes say. And the other is his belief in India. There were times in 2008, 2013, where today's optimism was just not there. But he still stuck on. And some of that is, it just comes from personality. Like, if I think of myself as a person, I am quite pessimistic, so I can't have anything near Rakesh's exposure to stocks, to equities. So those are the two things that stand out to me.
Yeah, and for me, his passion for stock market. So in whatever job we are in, we have to feel passionate about it. We all keep saying work-life balance, etc. But if you really want to be different, unique, and if you really want to perform differently from others, then you have to take that pain, you have to put in your efforts, and you have to enjoy it. So Rakesh, through the day, 24/7, he would live, eat, drink stock market. So one, passion, and another aspect about him is confidence. So one anecdote, I believe during tech boom, when people were buying tech companies, so Rakesh would buy PSU stocks. He did not understand tech, and he would openly say, because I don't understand how ITs work, so I am not going to buy those stocks. And he did not participate in 2000 in that rally. But he bought PSU stocks, and people will call, "Dekho gadha aaya." That's what he upfront on TV channels, he himself told to interviewers that "Dekho gadha aaya." That's how they used to call me. But still, he stuck his neck out, and he consistently bought PSU stocks, and eventually rest is history, because he made money in a subsequent period, 2003 onwards, when bull run in Indian stock market did come, and he made a lot of money. So one, passion, and another, confidence.
Thanks so much. That was lovely. I think Rakesh Anecdotes are always inspirational in so many ways. And I guess one of the things that I'd say is, I'm sure in the process of this research, there have been some lessons you've drawn, and maybe more like, what did he do differently from perhaps other people, and how things have changed. What would you say has been, say, your biggest lesson from that kind of shocked you, or put you into this thing that said, I didn't know that you could do this and still survive? I'll start with Aparajita this time.
Okay, so initially, so I did understand difference between investment and being an investor and being a trader. I did understand it, but when I studied about Rakesh Jhunjhunwala in detail, then only I discovered that how difficult it is to be the both. You cannot be both. And Harshad Mehta and Rakesh Jhunjhunwala both were rivals. And I spoke to one of journalists who used to cover stock market in 90s, and he told me that Harshad Mehta in confidence told this journalist that he admired Rakesh Jhunjhunwala. They were rivals. But in private, he did accept that he admired Rakesh Jhunjhunwala. Why? Because on this journey from being a trader to investor, in 90s, everybody was a trader. And gradually afterwards, people, when they had wealth, then they started investing. But with that trading mindset, you cannot invest. But Rakesh Jhunjhunwala could make that transition, and so well, and throughout his life, he kept on trading and investing both. And he would trade and invest in the same stock. How one can do that? How could you have two opposite views related to a stock? So he could do that. He had that ability. So not many people can have that. So that's what it is.
Interesting, guys. And it's famous also. We don't hear about his trading positions. We hear largely about his investing positions. So to a certain extent, I guess the folklore has come from the investments, but the trading is probably even more legendary, or other. But we won't know this unless we know the trade. But I'm sure. What is your view, and not just on that, maybe on anything else that you've seen about in Rakesh? What maybe lessons did you draw from it?
Yeah. So in fact, I'll supplement what Aparajita said. If you think of the 1990s, from 93 to 2003, the market didn't really go anywhere. Like, it was a long period of just stagnation, up and down. And that was probably, in hindsight, a rather smart time to be a trader, which he was. Not all of it, and not all of it successfully. There were periods of doldrums, like the dot-com boom, when he was not participating. He was not making any big money. But something clicked in his mind in 2002, and that is when he accumulated the three stocks that made his fortune. So, CRISIL, Titan, and Lupin. In big chunks. Obviously, like with Titan, there was some investment before also, but clearly he made big investments at that time. He said he wrote an article in Economic Times outlining his reason to be bullish on India. Now, if you think about 2002, there was nothing remarkable about that year, right? Why would suddenly anyone have a thesis? But he did, and the rest is history.
This is quite inspirational. And I personally also heard one story in 2008, in November 2008, and a trader who was working with Rakesh told me this, Deepak, and he told me this is what Rakesh believes also. The world, the cycles have contracted. So earlier bear markets used to last 3-4 years. Now they will last 6 months. This is November 2008. And in May 2009, the market hit 2 continuous upper circuits and has never seen those values. It's just gone berserk after that. But it, he said that Rakesh is basically accumulating stocks with both hands. And he's saying that the cycle will not last very long. So I was at that time, this is when the market has fallen 65% in the year. People are not celebrating Diwali in Bombay, which is tough to imagine. It was a crazy time for anyone to even think of accumulating stocks. But he was literally saying, I will take leverage and accumulate stocks at this time. So in that context, and that's something that perhaps I'm sure you've learned a lot on the book itself, in the process of the book. This straddling between the trader and the investor, being short in the Scam, the movie about Harshad Mehta. There is Rakesh Jhunjhunwala and R.K. Damani, and their relatively younger days. And in there's someone who's acting as him, making the statements and saying this will be the kya pata agle market ka Harshad Mehta main ban jaun. He's actually talking about how the bull run is ahead of us, and he's always been a short player, and now it's time to go long the Indian market. So, I mean, you must have come across so many positive people who've told you about this. He said, his trading capital from trading. But then he generated his trading capital long back. Then he could have just been an investor like most other people. But he chose to continue his trading framework. What are the interesting parts of maybe, what you might find as a conflicting position, but still a phenomenal, it makes him a better investor by just trading, which I think you've mentioned in the book a number of times. He's learned from his trading. So maybe anything that you could elaborate on that part.
Okay, so one surprising thing that he did, so we think of him as this consistent genius, but when COVID first struck, he was actually short, he was selling out, and then he reversed himself. So throughout his journey, there were times when he seems to have genuinely been in doubt, and then reversed course.
And his personality was quite conflicting. He would not follow a trend. So, for example, buy now, buy now and investigate later. That's how he would buy stocks. That buying that value, you have to buy it at that perfect value. That you don't have to wait for stock to go up or down. But buy now, investigate later worked for him in Titan, but did not work in DHFL. So he had that conflicting ideas. And about trading and investing position, what I believe that even though he had accumulated capital, but how do you get that kick? So this could probably be the reason why he continued doing that. And another aspect, he did not want to manage other people's money. So if you have money, you have to do something during the day. And he loved stock market, and he did not want to be answerable to anyone. So he did not he never wanted to get into the business of managing other people's money. Then he had to trade. What else? Because investment is long term. You invest and forget. So, which is why he may have continued trading, and obviously it worked out well for him, and he generated 35,000 crore is what the estimate of his wealth when he passed away in last year, August 13 or 14. So, I think this could be the reason why he swaddled between both.
Between both. No, it's very interesting because I think from a perspective of even his investments in the stock market, and then he did investments outside the stock market. Perhaps Akasa was one of them.
A lot of unlisted companies.
Anything that was, that's
and movies as well.
Movies also, R. Balki movies.
Oh, really? Oh, okay. I must have missed that part.
Oh,
Okay.
English.
I see.
English was the first movie in which he invested, and all movies where he invested, it's directed by R. Balki. So.
Interesting. Okay, so this is so the story of, I mean, of course, the legend is Rakesh Jhunjhunwala, the man, and like you said, he famously said his wife is his only client, and rare is Rekha, right? So I think he never actually, when he was interviewed on TV, would ever talk about his positions, as in, am I buying or am I selling? He would always talk about the stock. And then the TV interviews, आप खरीद रहे हो क्या? He'd be like, आपको क्या लेना देना? My only client is my wife. So this is so different from other people who talk their book and they'll tell you we are buying, right? Does this? How do you feel about this? Because do you think there should have been a disclosure that he's buying or selling, or do you say that it's better that he does not disclose it?
So I think it's better that he didn't disclose it, because there's already a cult of people who follow Rakesh, right? From his reported trades, followed Rakesh from his reported trades, or rather his reported investments. So every quarter, companies which have shareholders more than 1%, their names are displayed, and there are websites which collect all this information and put it there for everyone to see. So there is a cult that follows him, that follows other famous investors. So if he had said that, yes, I'm buying the stock, there would be every incentive for him to get that cult to follow him and then to bid that stock up, right? I mean, it could be either ways. If he was accumulating it, then it would not go in his favor. So, in general, smart thing not to say that explicitly.
But if you remember, then sometimes when he appears on TV channel interviews, then he would say, I can't recall the name, कि कमलेश बेच दे ऐसे करके TV or now he would be live on TV channels CNBC ET now, and he would say so. He will pick up phone and say, इसको बेच दे, इसको खरीद ले. So,
Wow, yeah, that's I guess the trading world is simply like that. And there was a time, and just again, anecdote that I've heard from the
I'm
traders.
expecting you to get a call now. No, it's after market hours.
Yes. Yeah. So interesting, because the SEBI regulations now have flipped towards, if you are talking about a stock, you have to disclose your ownership or your position in the stock. But it's appropriate that someone of the size of Rakesh should not reveal his position. So it's a little bit of this thing, but I'll come back to that. I think we should talk about the regulatory aspect of things at a later point. But one of the things that I it's really sad to hear of the last few days of a few months of his life in terms of his health. And he was always a little bit on the heavier side, but one would imagine that someone with so much discipline in the stock market, and looking at the relative health of, say, an R.K. Damani, who's also, roughly maybe his mentor and this thing. But, how have people perhaps described his attitude towards health in your research? I know that it's a difficult subject to approach because I'm not the healthiest either, so I shouldn't talk anything like that. But
same here.
no, I can. So Rakesh Jhunjhunwala did try to focus on his health, and we listened to some interviews from 2008, way back, old interviews, and when his daughter born, then he really wanted to get serious about it. He went on record saying that he would want to live longer because he had children quite late. I think about 14, 15 years of marriage. Children quite late. So he wanted to spend time with him and really wanted to get fit. It's just that he could never do that. And sometimes he would get himself admitted in hospitals. And in hospitals, obviously, you cannot get access to booze. So he did try, just somehow it never happened. So probably because I try maintaining good health, so I don't understand how intoxication works or how this thing happens, that if you really want to do something, and in stock market you are so disciplined, but if you make a goal and you don't follow it here in personal life, then, so this is something we have put out in the book also, what not to learn from Rakesh Jhunjhunwala. So if you are into business of making money, etc., so you have to get that compounding effect, and that compounding effect will come only if you stay invested for long, only if you stay longer. So Warren Buffett is a great example of it, and Rakesh Jhunjhunwala, we call him Warren Buffett of India, but it could never happen. He could not reach that level. So
he made his money faster than Warren Buffett. If you look at the two CAGRs, actually Rakesh was better, but yeah, he didn't live as
he
long.
didn't live, yeah. And it's not honestly like Warren Buffett lives the healthiest lifestyle, cherry Coke and McDonald's burgers. So
I think he just he brands it, the Coke, etc., but he doesn't drink it. So
maybe what's inside that thing is not cherry Coke; it's just water or something possible. But it's quite interesting. Now I know that we've got quite far ahead in the Rakesh Jhunjhunwala story, but I think I know you've written the book on it, but we should probably go a little bit more into the personal finance and investment spectrum. And let me ask you this individually. How do you invest, and has anything in this process changed the way you think about investing?
I was so tempted while writing the book that this position looks, this might make me the next Rakesh. I mean, it seeps into your psychology a little bit. But thankfully, I didn't take it up. I didn't do any F&O. I've done it before in my life and I've lost money. So that memory was there. So how I invest, by and large, I'm a fan of passive funds, but I make one big exception for just one mutual fund, because I really believe in their philosophy and how they construct it. And I've said this before in lots of interviews also. So that's Parak Parik Mutual Fund. a couple of reasons why I kind of invest most of my money there is they have some allocation to international stocks, and I think that there are some companies which India just doesn't have, cannot provide, our market cannot provide. So that benefit you get. But eventually, I think the alpha of any active fund house will run out, and I will shift to passive funds. And apart from that, I do NPS, I do gold.
Interesting.
Yeah, so my investment journey, so when I started working my first job with Economic Times and being in business journalism profession, from the very first month I knew that I have to start SIP, so I had that knowledge and not getting into insurance endowment policies, so I knew all about it. So I did not make, and by nature I'm a conservative investor, so if I'm investing somewhere a penny, then I will research about it a lot. So mutual fund, passive investment, index funds, etc. really appealed to me. So that's how I started. And from 2014 onwards, I started doing my monthly SIPs, and I made sure that whenever market, on any day when market is down, then I managed to put some money, for some, what do we call it, additional purchase on those days. So I kept doing that, and during COVID, I realized that my CAGR, my XIRR return is much higher than what Nifty did in those years. So this is my personal advice to everyone, that if you are doing your SIPs, then do add some amount on days when market falls. And so that was my very first mutual fund investment. And then I also bought mid-cap index fund. That's how I have created my mutual fund portfolio. And being in a full-time job doesn't give you enough time to track stock market, individual stocks that closely. So if market is down, then I have to put out that story. Being in digital desk, I used to work with the Economic Times digital desk, and later on Business Today digital desk. So I have to be there. I have to write those stories. I won't get time to sign in and do my own trade. So I never got time. I really wanted to get into individual stock investment, not FNOs. I'm never going to do FNOs. It's my resolve. So that will not happen. But while working on the book, I did feel that I should allot some time to understanding how trading works, because obviously everybody wants to make some money, and I want to take that bet. So as everybody says, if you have that itch, then you have to have put out some capital to that. If you are taking risk on your capital, then it should not affect your immediate life, your immediate important goals. So that's what I want to do. So with this book has taught me that yes, I should experience it. Neil has experienced it, and it hasn't been a great experience, but I personally want to get into not FNOs, but trading, as in short-term trading, I should say, not intraday trading, but buying stock for short-term and see how it works out.
Interesting.
I think, Deepak, we should flip the question to you. So incidentally, we have documented Deepak's portfolio in Mint. We have a series called Guru Portfolio. But Deepak, why don't you tell us how you?
I'm a lesser person than both of you, because I was bankrupt when I was 30. I had started a company and did all sorts of stuff. So I didn't have any money to invest. My first investment was something that, I bought at 10,000 rupees, and within 3 months it was 2,000 rupees. Because I bought literally at the peak of the dot-com boom, a fund called ICICI Technology Fund. It took 4 years to come back to 10 rupees. And I remember the day it came back to 10 rupees because you had to physically sign a form to submit it in some place. I physically took an auto to that place, signed the form, and got my 10 rupees back. But I mean, right now, of course, I invest everything in the PMS wherever, because we manage portfolios. But I'm also a big fan of index funds, so part of our PMS also in index funds. I have done a lot of F&O. And I think it's a very valuable practice if you're able to manage it. But you have to understand that it's a business. It is not कि आज किया चलो part time में कर लेंगे type thing. It's very difficult. So you have to devote time. So if I had nothing at all, nothing else I thought could ever work out in my life, I'd probably do F&O trading, because it's a loner's game. It's very lonely. The person I met who worked at Rakesh was part of a trading tribe where we would actually discuss the emotional pain you would feel. And this was 2008. There was a lot of emotional pain. And financial pain also, but a lot of emotional pain. Because you would literally walk in and walk out 10% richer or poorer on a daily basis. I'm not anti F&O, but I just don't have the time for it. And as a professional fund manager, we can't do anything with it for the most part. So I don't, I avoid it. But I think it's a great business to be in if you treat it like a business. But yeah, I mean, I'll flip one part back to you. You go both invest in mutual funds, but you both, I'm sure you come across stocks. Interesting stocks because you may talk to a management at some point and say, my God, this stock looks ridiculously undervalued for whatever potential they seem to be showing. Maybe the way Rakesh would have seen Praj Industries or though Praj, he got an offer for the shares versus you may get more. Does it not make you feel like, listen, I'm going to put some part of my kitty into this?
No, I do have stock portfolio. So 2 years ago, I started freelancing with the very thought that I should have some time to do other things than just journalism. So I did create a portfolio over last 2 years. So yes, individual stocks, sometimes you speak to companies and you do get that feel, yeah, this company may do well. And so one investment, Dr. Lal Path Labs, I did make that investment doing my research. I was studying about this company, and during COVID and all diagnostic companies were doing quite well. So in I did a long story on Dr. Lal Path Labs for Mint. So, and I did make that declaration that I have shares in that company. So yeah, it does happen sometime, and now I have started doing that. I do have my mutual fund, but obviously it's passive investment. I don't have to apply my mind, but gradually I'm getting into individual stocks also.
Interesting. Anything from any stories?
So in my job, thankfully, I don't write about individual stocks. There's a separate team in Mint which does that. So I don't have that temptation normally. And I have the memory of my many failures with F&O and with stocks. So I have 2 legacy stocks which are less than 0.5% of my portfolio. I don't do anything with. Yeah.
Tell us some of your the stories. Because people love stories of winners. You've written so much about them.
No, but mine is of losers, so...
No, but losers are even better stories.
By the way, I have bought Yes Bank. I did buy Yes Bank, but I can't.
Mine is Vodafone Idea.
2015, I believe.
Yeah, together the stocks are worth more than 20 rupees, but yes.
In fact, so who all do passive investing? Do you want to raise your hands? Yeah, but passive, like ETFs, index funds.
No.
Sizable. Although not as, I thought Bangalore audience would be very...
Passive?
Yeah.
No, nobody wants to be passive. How many people do F&O trading? Oh, wow.
That's more, okay.
Yeah. Thank you, I hope that happens. It's still work in progress. It takes an inordinate amount of time. One needs more grey hair, but...
So SEBI says that 90% people did not make money in F&O. So what about the sample size? You guys made money or losses? The F&O traders here. Yeah.
We can take a couple of. Should we do it now, or maybe we can do this later when the Q&A round comes in?
We'll get to this.
We want to hear the stories, but so Vodafone Idea and Yes Bank. Oh, interesting. But I guess one of the things that would have drawn you to these stocks would have been the fact that they were falling. Yes. And they catching falling knives, right? And Rakesh had this, and coming back to Rakesh, he had this saying that he used to keep apparently saying, Badave, Levanu, Ghatave, Bechanu. So you buy when the stock is going up and you sell when the stock is going down. And perhaps he was a good master of that art, and because he's built these extraordinarily large positions. I'm sure he didn't buy all of it when the stock was only down. I'm sure he bought a lot of it even when it was going up. Does this, and you guys buy mutual funds whose NAV must be going up each time you buy them, but somehow you don't probably feel the same feeling. Is this something special about people like Rakesh who can buy on the way up and sell on the way down, versus where most of us start thinking when it's fallen, let's go buy it?
Yeah, so I think that philosophy he applied to his trading positions as opposed to investing.
I see.
And that captures the essence of momentum trading, which Deepak, you're a great practitioner of, I may say. Um, when it came to his investment, so he had two broad points that we've distilled. So he would look at the scope, the market for a company to grow, and he looked at whether that company had a moat. Uh, this was the essence. I mean, he had other things that he said which are in the book, but for his investing, these two would be it.
Yeah, so he had this in mind. It was quite clear that if it's a trading stock, then you have to play the momentum. But if it's investment and if fundamentals are intact, then you'll stay invested in that company. Then in investment, you have to buy low and sell high. In trading, you have to buy high and sell even higher. So
Interesting, or sell high and buy back lower. Very interesting. And now I'm going to switch to a point where I think Neil has expressed his opinions quite strongly on social media, which is the finfluencer issue. I'm going to ask you this, and I know that. Let me summarize what I think. As a person who has been registered with SEBI, I find it appalling sometimes that people can guarantee returns, and whereas we people in the market are not allowed to. But we don't do it not because we're not allowed to, because we just feel it's not the right thing to do. But so. How do you see this landscape evolving, and maybe what should SEBI do to? Because they've tried a lot of stuff, and what do you think is an interesting solution? Maybe not a single solution, but maybe a path to go forward.
Yeah. So we have to think of the history of how this came about. And that is not that old, right? That starts with the pandemic, when we were all stuck at home, on the net, on our phones, and surfing YouTube. And this is when these guys built their massive followings, YouTube, Insta, etc. What people didn't see so much is who was funding them. There's always a financial side to everything. And us in the media, we also ignored it for a long time. We were also celebrating the rise of the influencers, new generation, people coming to the market, all of that, which is good. I'm glad that the market has expanded. But for whatever reason, everyone ignored the money that was going into this. And it's not small money, trust me. It's massive amounts that they earn, totally opaque. So we did a story quite recently, probably just a month ago, where we identified two ways in which they make money, neither of which is healthy for investors, for the market. So number one, they have affiliate links and marketing arrangements with stockbrokers. So and it's a vicious cycle, because they will make a video on trading, they will have a link where their followers use it to go to the broker's website and trade, and they get a cut of every single trade, of the commission generated from every single trade. So they have every incentive to make the next video and the video after that, make it even more attractive. I mean, reality be damned. So this cycle is something that we documented, and it's not hidden. It's there on their profiles. All you have to do is go back in time and look at all the links that they put out. The other thing is courses, right? Educational courses. Now there's a huge unmet demand in India to learn about investing in the stock market, and the formal system is failing there. There is, you can't go to a college, you can't go to a university, you can't go to the CFA society or any other legitimate body and say, I want to learn. I have a job, I'm salaried, whatever. I want to learn about this. You teach me. And this is where they stepped in. They stepped in with their 500 rupee courses, 1000 rupee, whatever it is, and raked in money. Again, why is this problematic? I mean, sure, it's a good thing they're educating people about investing, but there are no checks. There is no certification, and it's dangerous, because if they are saying something like F&O is going to make you money, which a SEBI research paper says that only 11% people actually make money in F&O, the rest 89% don't. Then who is going to, when investors make losses, are the influencers going to be held responsible, right? Because there is no commercial relationship, there is no fiduciary relationship between the influencer and the investor. So this is the big problem that not just the media, but now SEBI has woken up to. So So the SEBI chairperson had a press conference around a week ago, and she laid down 2 points. Number one, she said that there should be a separation between SEBI regulated entities, such as brokers, and unregulated ones, such as influencers. There should not be arrangements, affiliate links, marketing contracts, what have you. And in fact, some of these guys get a dashboard. Like when you open a brokerage account through them, the broker gives them a dashboard. This is what your guys are doing. This is the commission. Because how do they track how much money is being generated, how much commission is being generated? Which is even more like it's a violation of your privacy. So the SEBI chairperson said that there should be a separation between these two categories of people. The second thing she said is if there is an inducement to trade, if somebody is saying, hey, trade and you'll make 40%, then they're not going to be happy with that. So I think SEBI is on the right track. I hope, what they've said is they'll bring a consultation paper first. They'll invite public comments, which is fair. Industry should respond, investors should respond, and there should be a robust regulation in this area.
This is, just to add to this, what do you also think of perhaps the relative over-regulation perhaps, where you can't talk about stocks, you have to pay 3,000 rupees for communicating with your customers. There perhaps has been, maybe there's, sometimes some of the registered advisors have told me that maybe I should just give up my registration and then do whatever I'm doing, because then I don't have to pay the 3,000 rupees and I can still get away with it. So is there overreach on the regulated front?
Yeah. So there is this poor, hapless creature called a registered investment advisor. There are only 800 something of these poor souls out there in India. How many do we have in the room?
Any registered
1, 2,
investment advisors?
3,
I
4.
feel you, man. I feel you.
So this would probably be the population of Bangalore's RIs. This is probably it. Again, let's go back in history, right? 2013 is when SEBI came out with the first RI regulations. What was the idea? The idea was that so far all the intermediaries, they are earning money through commissions. That is fine. A lot of distributors do great work for their clients. They put them first. But there is an inherent problem in having commission as your way of earning, because you're incentivized to recommend high commission products. Again, I give a strong disclaimer. A lot of individual MFDs do a fantastic job with their clients. This is unfortunately not true with most banks. You walk into a bank branch, first thing they'll try to sell you an insurance policy, because that gets the highest commission. Then if you prove sturdy enough not to buy that, they will try and sell you the highest commission mutual fund. In fact, before they get to that, they'll try to sell you something called AIF and PMS. Now, there are some good PMSs out there also. But usually those won't be the kind that the bank would recommend to you. So therefore, coming back to the point about RIAs, there is an ever-tightening set of regulations that have come on RIAs. Why? Because there were some smart guys in Indore who managed to get these licenses and do stock tips and break every rules. I don't know how they got the licenses, but somehow they did. And so SEBI decided that now everyone has to be clamped down upon, and so the rules were tightened and tightened further. Just to give you an example, this is going to be somewhat technical, but just to give you an example, they have to record all client conversations, right? Which again, you're entitled to your privacy. They can't collect fees for more than 1 quarter. Now, if you're going to an advisor to tell you, hey, draft me a financial plan for the next 5 years, and they can only charge you for 1 quarter, that's not logical. So a lot of this is just red tape. And then this year there was the last straw, although there could be more straws, so we don't know, which is the advertising code, which means that for most communications that RIAs do in the public, they have to get permission from a body called BASL, which is owned by BSE, the Bombay Stock Exchange. Now, not only do they have to pay money, 3,000 rupees is the lower end for individuals, it goes up if you're corporate, but they have to wait for permission, and everyone knows how long permissions take in this country. So it's messed up, it's lopsided. There are only 800 RIAs in a country of 140 crores. I'm not falling into the startup trap where everything becomes benchmarked against 140 crores. But even if you assume that the investor base is 1 crore, still, what is 800 and something?
I believe MFD lobbies, they are at it. And which is why it's not happening, because 2016 regulations were much, some bit better than what they came out, amendments in 2020. So you don't have to to have a master's in finance to become an RI. Why do you need that? A simple graduate can also have that financial knowledge if they are into that business. If you already have 5 years of experience in financial services industry, then you shouldn't get obliged to do a master's in finance also. And I believe they have to keep giving those exams. So
I did an MBA because of this. So I completely understand the pain, but yes.
And then you have influencers. I have spoken to a couple of influencers in different media events. They are engineers, and they will hire experts in their team. They will pay them salary, and they are the ones generating content for them. And just they are extroverts, good on camera, so they are speaking out loud. But the real effort is behind. They have a team to help them come up with those topics, etc. So.
Interesting. No, I mean, also coming back to RJ, he was probably the original finfluencer who never made any money from advertisements. He never even asked people to invest in the stocks that he invested in. He never even told them that I'll manage your money. So he's actually better than people like us who effectively are saying that, come into RPMS. But that the core philosophy is perhaps that is the finfluencer you want. It's a shame that we don't have him with us today, but and perhaps more lessons on that front. But coming back to another topic, and I think we've had a question from Mayank Ved. I think from if you're here, yes, hi. So it's a question. Do you? Can I ask the question? Is that okay? Sure. I'll just do it, and then we'll open the round to questions. The idea of delaying consumption. And I think you have been a financial advisor yourself, or you have written about it in delaying consumption in order to meet longer term or build wealth for the longer term versus consuming today. There were statements once Rakesh also made that he sold his shares of CRISIL to buy a house, and that effectively that house is worth 750 crores because the shares grew to that much. He also sold shares once to set up Star Health as well, but of course that was an investing thing. But delaying consumption versus saying that, listen, some COVID thing will come and kill me, might as well spend the money I have now. What are your views?
I think it's about balance, and in your book also you have touched upon this topic, that it's no harm booking a business class, or no harm in buying a good phone or going on that expensive vacation. There's no harm in it. Just that you have to be aware of your finances. If you have got your basics right, if your emergency fund is intact, and if you have insurance policies for your medical or any other unforeseen events that may happen, if you have those basics right, then obviously you can go and splurge. So because we have to enjoy our days. Why to think only about future? You have to live in present. You have to enjoy that. So so delayed consumption only until you don't get your basics financial lessons right. If you have an emergency account, if you have insurance, if your SIPs are going fine, then no harm splurging amount. So that's how I approach my own investments. I do splurge sometimes, but I am a conservative person when it comes to expenses. So that's how it works for me.
So it's been a very real issue in my life, because until 3 months ago, I was this let's save as much as I can person. And then I had a fracture. I fell down while coming down a hill. And I mean, I'm fine now. I can walk now. But I was on crutches for a couple of months. And I had this fear at the back of my mind that, what if I can't walk again? All those places that I wanted to go to, suddenly, I can't go to anymore, even with all the money in the world. So I don't have an answer to that one. It's a very subjective thing. But I think, Deepak, there's data that, especially personal loans and credit card loans are growing at a very rapid clip.
They are. They're about 20, they're growing at 30%. They're at 2 lakh crores now. They were at 1 lakh crores just 3 years ago. So they've doubled in 3 years, 2.5 years. So, but then would you do that? Would you take a loan to finance a consumption need?
No, I wouldn't do that, but I'm getting very sucked into this whole credit card thing. Not to borrow and spend, but there are some credit cards that offer pretty good deals with points. So this is a plug for tomorrow's story. We're doing a big story on a credit card. But yeah, not to borrow. I don't think I'd do that.
Good. Oh, very interesting. I mean, because in a weird way, Rakesh himself wouldn't borrow to spend, but he'd borrow to invest, which is probably another weird thing that happens. That would you leverage yourself to invest in the market? Let's say the market fell 30% today. Can you say I'll take a loan to invest in the market? I know that sometimes it's not allowed, but assuming that it was legal, would you do that?
So again, there's data on that as well in ET, yesterday's ET, I think, which shows that margin loans have gone up massively. So margin loans are given to buy single stocks. It's a little different from F&O, but both have a funding element built into it. If you think of it mathematically, when interest rates were low, when they were 6 and 7%, and the stock market is expected to give 12-13%, it kind of sounds tempting. But behaviorally, I mean, if you are leveraged and the market is down 10% on the day, I don't know how many people can sustain that.
Would you, Aparajita?
No, and I believe a lot of people, when they trade and it doesn't perform, the stock, it doesn't go the way they anticipated, then they become an investor in that stock. So it happens a lot. So which is why, so leverage trading it won't work for me. I am never going to play into F&O stocks or the way Rakesh Jhunjhunwala did it. He could do it, and while researching on the book and speaking to people, even those people accepted that he was different. He had that ability, he had that mental calculations that beyond a point, he will deleverage himself. So he had that ability to bear losses. He will not marry stocks. If he feels momentum is going against him, he'll cut his losses. He'll sell. Every day he will balance out his positions. Even if he feels that tomorrow the stock in which he's trading may go up, but still he'll close the position the same day. So he followed a discipline in trading. But obviously that behavioral aspect we don't talk about. Behavioral investment, we don't talk about it much, but it's very important. Your own, a lot of people are doing a lot of things, but individually how you are you an aggressive investor, are you a conservative person, how you are, it defines, it eventually reflects in your investments. So that's very important, and personally I cannot take that risk. So
yeah, it's not just the risk, it's also the stomach lining. You can't lose more than 30% typically. Sorry, you were...
No, I was thinking, can we get the questioner's view on this? The
Yeah.
consumption thing. So I'm a journalist, I'm always more interested in what people...
So we'll open this up to questions. Yes. So...
You should start with the industry.
Good evening to one and all. So I have two questions, if I'm allowed to ask. So first question, like according to a study, most of the Indians have their 70% of their wealth in real estate, which is in most of the cases illiquid. So, and nowadays we obsess more over which mutual fund or which fund to invest in and which stock to, pick. But people are not understanding how to allocate their assets, which is their best allocation strategy. Is it based on their age? And nowadays, they say that if I'm young, I can take more risk. And if you are a 40-year-old, you can't take much risk. So, how should one go about their asset allocation strategy? And, one is definitely the discipline and patience, but I feel asset allocation is one important aspect where most of us, fail. So if you can, spread some light on that. And second question was about this book. I wanted to know what was your motivation towards, writing this book. And we know that Rakesh Jhunjhunwala was so confidential about his trades and all. So how was your journey about, getting that insights and, did you talk to his team, family, and, how was that journey? Want to know more about that as well.
So Deepak, can we get you to answer the first question? Then I'll supplement it, but I'm curious to get your view on asset allocation.
This is interesting. Okay, so there are two paths, and I'll tell you the path that is boring, which is possibly the more correct thing to do, but I'm just correct from my perspective. I'm not Rakesh Jhunjhunwala, so please, So
the next Rakesh.
Well, size-wise maybe, but I'd say, you start off like this. first of all, many of you have money from the time you are 22. This is alien to me. I started getting money only in my hand when I was 30, 31. And then I knew the value of it because you had lived 8 years without money, right? So you kind of nowadays you have people who have much larger corpus. You can start your SIPs and all that early. But my point is first build your emergency fund because emergencies can happen when you're 22. 10 months of expenses. I use 10 months because as an entrepreneur, but many of you can use 6 months. Though at a time like this when people are losing jobs, you should still go 10 months. You then build yourself. If you have children, maybe many of you do. How many of you have children? Oh. See, more than the F&O traders and the better investments. But, so the point is at some point, the education costs will come and bite you at the 12th standard ke baad, and after 12th and maybe post grads and all that stuff. You got to start building for that a little bit earlier in life. So you got to have to, these are what I call stuff it's going to come, you got to plan for it. It's not complicated, it's just a formula saying I need to get to here, how do I get there? And it's some 10,000 rupees a month or 20,000 rupees a month. Ridiculously low amounts can get you there, get you to relatively high numbers over a 15 to 20 year period. The next part would be your own retirement because at some point you'll want to stop working or you'll be forced to stop working. I would say at this point, depending on income from an employment situation would not be a good idea. You just want your corpus to generate enough and you can keep working if you like. But that's fun more than work is. So you start with these like boring stuff first and whatever's left on top of that you spend. It's great. It typically does not happen this way. It usually happens we'll start with crypto. And then F&O. Now F&O is the new crypto. And then you lose everything. And then you say stock markets are only for the, for some people in Bombay, they only manipulate the markets. Then you buy real estate. And then you think real estate is an investment. Then you realize if you live in that house, it's not an investment. And then you say, oh shit, I have to save. By this time, you're the age at which I start to have money, which is about 30, 31. And then you say, okay, now we start this process. And then you'll go the old boring path of maybe SIPs. Many people approach it differently, but I would say asset allocation, this is your personal financial plan. Now, how do you asset allocate is, I think, relatively simple thing for me. There's something between that's equity, there's something that's debt. I am comfortable having a lot of equity. I believe in the long-term nature of markets, but I will still have my emergency funds. I don't have PF, our company is too small for it, so you might have PF that will act as your debt kind of fixed income kind of exposure. You want to just build your exposure based on your risk appetite. If you don't know your risk appetite, just go 50-50. It's also Harry Markowitz, who recently passed away, who invented the formula of how you should evaluate a company's equity versus debt relationship and how much they can have. He himself said, I didn't understand all of this, so I put 50-50 in debt and equity for myself. So, of course, at a personal level, people behave differently and companies are different, right? But I would say your allocations that way, real estate is not an allocation. People think they have money. 70% of Indians think they have money in real estate. But if you're living there, it's not an investment. It's like having a car. Nobody says 70% of Indians have cars or bikes as an investment because it's a consumption tool. If you don't live there, you'll have to live somewhere else. So if you have 2 houses, then one of them is an investment. And most of us may not have that capability or, it's painful to have 2 houses and it's such a big part of your portfolio that it's just, it'll take over everything else. So I would basically plan asset allocation based on liquidity. Simply put, if I need the money in the short term, less than 3 years, it needs to be in debt. If I don't need the money in 3 years, then I can go all in on equity, all in for me. But it may be different for you. So you want to adjust your profile. I'm sorry, it's very confusing, very boring, but in the end, if you just don't buy crypto.
So I'll just, Deepak gave a fantastic answer. I'll just supplement it a little bit by my personal experience, more than my knowledge. So we underestimate how much our personality plays a role in how we respond to situations. There is probably a scientific number out there, but we don't, even if we know it, getting there and staying there is very difficult. So speaking about myself, I'm like I said, I'm a pessimist. I'm a pathological pessimist. So I have gold. I have 15-20% gold. I think Deepak, you don't have any gold at all.
Trying to sell whatever I have.
Yeah. So I'm happy to buy. So I'm happy with that because it aligns with who I am as a person, and that plays a role.
So in asset allocation, I think everything got covered. It boils down to your own risk appetite. So after people who get not working anymore beyond 60, they also invest in stocks if they have that risk appetite. So yeah, go ahead with it because life expectancy is 80 years. So even at 60, you have 20 years of life remaining. So you have to stay invested in equities if you have that risk appetite. So it boils down to that.
Hey, interesting.
And about the other part
Yes,
that
yeah,
he.
that's what
So you can take up the motivation part and I can take up the research part.
Yeah. So our motivation, there were two reasons. The bigger reason is that we've been fans of him like everybody else for a long time, especially Aparajita. She's tracked him a lot longer than I have. And when he died, that was the right time to do it. In terms of research, so we had two challenges, both polar opposites. One is that there is a ton of stuff about him in public, right? He's hundreds of video interviews, articles, etc., news. And then there is the circle around him is incredibly tight-lipped. Like there were times when we would like go to people's offices and sit there unannounced and hope that we'd get an interview. And even then we couldn't crack some of those. So we got some, many of them off record. And so it is a mixture of tying the huge amount of information out there in public and the bits in private where we could pull strands out.
Yeah, so when I started my job in 2014 with ET, so one fine day he appeared on, I did not know about him before that. I got to know him only after I started working. So on that day he was on channel and my senior editors, they would say that Rakesh Jhunjhunwala ka interview aane wala hai, we have to put it out way too quickly, ASAP. That's how it works in media, that in digital media way more. Because if you put Rakesh Jhunjhunwala's stories, then suddenly in spur of moment it will be the most read story on the website. It will be on top, on Chartbeat. So he had that aura the way Narendra Modi had during those days. 2014, if you remember, is when general elections results had come out. So he had that aura. So this made me quite curious about this person, that who is him? And I started knowing more about him and working in following years. And I used to get to write about him and covering those aspects. But I never got a chance to meet him because I'm based in Delhi, not in Mumbai. So I could never even try that. And so when Neil called me and discussed this book idea and asked me if I would like to be part of it, then I had to say yes, because this opportunity gave me that time and motivation to know about him in detail. And I was quite excited about it. And we discussed it in second week of August. Third week of August, I happened to be in Mumbai for a Mint event, and we went to Rare Enterprise. So we tried meeting family, we tried meeting Utpal Seth and everyone, just that it was a difficult phase for them. So they would not be comfortable talking about him during those days, and they had a lot of things to take care of after he passed away. So we did reach out to the family, but it could never happen. But obviously we did speak to a lot of people off record because he had that personality, he had that close knit of friends and little private, the way Neil described it, polar opposites. So, but still, we got really good people who went on record also, Samir Arora, Shankar Sharma, and Ramesh Zamani. So yeah, so it's mix of all.
Interesting.
Okay. So in the interest of time, I'm going to request everyone to stick to one question and to direct it at a particular panelist. Thanks.
Yeah, I have a question regarding luck, right? I'm a little surprised that we haven't talked about it. So what about like here, survivorship bias, right? Because I think I often say that, like, for example, let's take Amitabh Bachchan, right? Amitabh Bachchan has done some amazing films, right? Like Diwar, then Sholay, and so many more. But he's also made dud movies like Khuda Gawa and Mard, which nobody remembers, right? So you look at the highs. How much of that is like, what is the role of luck in his run? That is one. And what did he believe about the role of luck in his own maybe interviews, what you have seen behind the scenes?
So I'll take the question on Rakesh, and then Deepak, I think, could have something interesting about the role of luck in investing in general. So about Rakesh, I think the way clearly luck plays a massive role. He was able to get the Titan allocation 2002 from some broker, a big chunk, and he took that decision really fast. And yet he picked up DHFL, similar modus operandi. He met the promoter in a flight, and in a short span he decided to buy. I think the way he managed it is he let the winners run massively. I mean, if you look at his portfolio, at death as well, Titan is the biggest chunk. And the losers like DHFL, he didn't add. He kept it where it was. Deepak?
On the role of luck, yeah, I think, all markets are a lot more about luck than they are about, we think it's investing prowess, but I can tell you this, you can have the best investing strategy and you can still lose money. Because if there is a 2% chance of a loss, just a 2% chance of a loss, and if you have 50 continuous losing trades, you're likely, given the same positions that you've taken, that you lose a significant chunk of your money. And when you lose money, if anybody has played card games online, solitaire or something, you start getting tougher and tougher games, then you lose confidence and you make mistakes using the same thing. If you played bridge online, you'll suddenly start making mistakes in counting thoughts, after you lose. So those behavioral challenges will come and affect you. Success changes the things exactly the opposite way. Suddenly you start feeling Apunish Bhagwan hai type funda. And sometimes you make mistakes, but sometimes you get back into this, you get in the zone. And when you're in the zone, sometimes great things happen. So I don't know about Rakesh, and he's actually acknowledged the role of luck in a few interviews. He said, sabka time aayega, in many times. Market mein sabka time aata hai. So you can be whatever you want, as long as you're, if you're disciplined towards it, you'll get what is coming, what you think will happen. And the role of luck is so big that the problem in markets is not having the best investment strategy. It's having the best risk management strategy. So if you don't lose all your money, you're okay. So there's a saying by this guy, I forget his name. It says, if you don't bet, you can't win. But if you lose all your chips, you can't bet. And that sums up the investment strategy. And Rakesh had this philosophy that said he would bet bigger, take leverage when he could, when he believed it was much more likely that he would win than he would lose. But at the same time, he would cut his losses also quite strongly. I think that probably held him in good stead. So even though there's a lot of luck in the markets, it's about how you frame your investment strategy to incorporate luck. That says, I'll lose, but I'll lose little. If I win, I'll win big.
Sir, salamat to pagdi hazar. That's what he would say.
Just talking about luck and chance, just one statement, not a question. I don't know if anyone of you knows today, it's just chance we're talking so much about Rakesh. Today is his birthday.
Yeah.
Oh, yeah.
We announced it on Twitter.
We-
Okay, thank you. My question is for everyone, but I think Deepak might have the answer for this specifically because it's an investment-related one. Question is around value investing. I'm not sure if what Rakesh Jhunjhunwala did could be considered value investing, which is identifying a stock which you see that there is value in it, and that is why you're investing. My question is such a strategy still valid in today's market where the value investing made a lot of sense when you could put a lot of research into something and most people couldn't. right? However, with the spread of information, with the amount of automation that is done, and the number of screening tools that can tell you all the matrices, right? Is such a thing still valid, or a strategies like momentum, which of course I follow because I'm a capital-minded user, is that the way to go?
It's a tough question. I shouldn't be the one talking. It's about more like them. But let me give you a short thing. Okay, here, I think labels are dangerous. So value, growth, quality, momentum. It's dangerous to say you are an ex-investor. The reason being, the times change, people change. You have to be willing to change. You should have these labels as personal identity things. I'm a communist versus I'm a capitalist. Even that changes sometimes over a period of time. But I am, a climate change activist is more of, philosophical stand that you might take. In markets, it's very dangerous to have those positions. So whether a value investment will work or not is a point about time. So the last 1 year, PSU banks have done incredibly well. Nobody thought PSU banks would ever do incredibly well. One of the biggest fund managers of one of the largest mutual funds has held probably PSU banks for like 10 years, and they didn't do well. And, it's a tribute to him that they moved up just before he quit and said, I'm going to do my own thing. People don't know what they... But, of course, he didn't say that, but he left on a great note. But the point over here is, I think, I don't think any investment strategy dies when they are more broad-based, like value, momentum, and all that stuff. Certain arbitrage concepts may die. There used to be a buyback arbitrage trade where you could subscribe to a company having a buyback and then make these supernormal returns because the buyback used to be 20-30% higher, and you would make this 20-30% in like 3 months, and you'll be like, damn good. Too many people heard about it. Too many people subscribed to the buyback. The company started giving less and less. So you give 100 shares, it would only give you 30 shares in the buyback, return the remaining 70. The price would have fallen since, so you would net not make a profit. So the arbitrage this kind of system, because of knowledge, because of the spreading of information, those may die. I don't think investing frameworks will die, and I don't honestly think that what Rakesh did was value investing. All his stocks were probably value at some point, growth at some point, momentum at some point. He just held through the entire thing. And he probably bought more at different points in this process. I would say that concept of just buying through different cycles, that will never die. It doesn't have to be who you are.
Yeah.
Neil, no difficult questions today. I just wanted to ask you, do you know exactly how he got his first amounts for investing? Because the story goes that my neighbor, his uncle was the one that gave Rakesh Jhunjhunwala his first amount to invest, because the family was not keen for him to get into the stock market. They were, I think, tax consultants or something like that. And so this uncle actually gave him money, and Rakesh said, this is just after college. And he gave him the money and said, I'll double it and I'll give it to you. This is what Rakesh said. But the uncle said, no need to double it and give it to me. Just give me back my original sum and that'll be great. So do you have any thing like that? And the other thing is that he invested large amounts in all these companies. Where did he get that money from if nobody was supporting him to actually invest?
Yeah. So he was borrowing money from his brother's clients, and he's acknowledged that as well in many interviews. Yeah, at really high rates, 18%, etc.
That isn't high. I think he would have borrowed at much higher rates, probably 36%.
Yeah.
And that's how he built his positions, right?
But the other question of how did he get his trading capital, for the capital to buy those 5,000 crores or
so
whatever?
it's also in one of interviews he mentioned that only 1 lakh he invested in trading and rest is his profits. So I'm not sure how he would do that.
So it's a little murky those initial years. But broadly speaking, that was his initial capital, the money he borrowed. And he had some spectacular bets like the Madhu Dandavate budget. So since that paid off, he built his capital.
Okay. I have a question about personal finance. I'm an RA, but I won't talk a question about RA. And being frank here, Deepak. So Deepak runs an excellent podcast, and in case I have no association with him, but in case you've not.
Excellent book as well.
Yeah,
if I
but
may.
I'm just talking about the podcast, right? And there is YouTube and you have this.
No, Deepak's book, not ours.
Deepak's book
Sorry,
is in my bag.
No, no, no. I'm saying this is about this book.
So probably the number of viewers he gets in his podcast, excellent ones, in a year, this film influencers get in a day. Right? That is where things are. This is also because, if you want to tell the hard truth, it doesn't have many bias, right? So you can talk about any of it, but it'll always be like this in the world. So what could, the question is not to you, the question is to the journalist. So what could a mass media thing, you have reach to a larger people? And what could you do slightly more so that people do not get into this get rich quick things? Right? You're doing a great job, right? Particularly Mint is doing a great job. And I like the fact that you're following ET also, right? You know what your competition is. But what could the mass media do a bit more to get this thing across? We have to keep repeating it multiple times. Thank you.
Yeah, you're absolutely right. And that responsibility is very much on the media as well. We can't always push everything to the regulator. So I've tried to the best of my ability to always talk about RIAs, to always warn people from influencers. At the end of the day, how much ever we try, social media is open to everyone. And in some cases, their followings on YouTube are more than like regular conventional media. Like our subscription is probably a fraction of some of their YouTube followings. But you're right. We should try and definitely we can do more.
They have money, so they have that ability and reach to go whole hog. But as media people, we cannot do that. We don't have that much amount of money. So, money as a rule.
Hello? Neil, hi. This is Sukumar here. In continuation to your Parag Parikh flexi cap portfolio, can you expect foreign companies direct listing in India? As of now, it is not there.
Yeah, that would be awesome if it happened. So Gift City looks promising, and maybe one day they'll enable it there. There are a whole bunch of things happening in Gift City. So the big one is the SGX, the movement of the SGX to Gift. So I hope so. Deepak, do you want to supplement?
Actually, as you know, foreign companies where we have fraction buying. So probably if you can just give a session to SEBI whenever actually you
Fractional share buying.
Fractional share buying. So this is again, it's related to crypto, I believe, and all those sort of investments.
No, shares itself. You can buy 1.5 shares of...
So fractional shares so why don't you buy whole shares? Exactly, fractional shares of what? Fractional investing works in real estate, fractional investing works in US stocks as well. Right. So, do you have your own demat account and taking LRS route, buying into those fractional shares, or how do you do that? Okay, in India we cannot buy fractional shares. Yeah, obviously, if SEBI allows it, then well and good. It's just that you don't get voting rights, and it's a little complicated doing all that calculations.
So let me supplement that. So NSE actually tried this in Gift. They set up an exchange where they were trying to they're listed some 20, 30 large US blue chips, but no volumes. People were just not buying. They did it after the peak in tech, and by then, people worried about stocks falling rather than buying. But I really hope something happens in Gift and that becomes possible.
Yeah, market making is a tough activity. Yeah,
Like you, I too invested in Yes Bank when it was crashing. And obviously it has not gone up, etc. So have you done any professional study that, and are you hopeful of it turning around? That's one. Second, any one of you, finally, did you happen to meet Mr. Rakesh Jhunjhunwala?
No, we haven't met him. And about Yes Bank, I sold my stocks. I did invest in it, but later on I figured, no, this will go nowhere. So I sold that stock. And I believe, Neil, you did one story that how catching falling knives and how retail investors lose money in such stocks. Buying just because these stocks are falling. You also have to get into fundamentals. So at that point, I did not get into fundamentals. Had I gone into those, then I would not have bought Yes Bank. So I don't think that it will again go back to those levels.
Yeah, so just to reference that story, we documented which stocks have the most number of retail investors in them. And it just happens to be these falling knives kinds of stocks.
Yes, yeah. I can't comment on individual stocks here. It would not be appropriate. But yeah, there's a lot of factors that impact stocks like this. Specifically, in one of these cases, you should consider that the 80 rupees of the past is probably equal to the 10 rupees of today, because so many more shares have been issued that you might be thinking that it was 80 rupees, when will it go back? But for it to go from 10 to 11 rupees itself is a big thing now. Or, just as a thing.
I'm audible? Yes. Yeah. Here.
Yes.
Yeah. So I just wanted to understand, most of the money was made for Rakesh Bhai was on holding them. So what was his research post buying them?
Research post buying. So he was very actively engaging with the managements, right? There were these legendary calls where he would blast them. He was not a passive investor in any sense of the term. So clearly, I mean, the big positions he kept very, very careful track.
Yeah, quarterly results. I believe he was a CA. He was much into financials, etc. He will track all those stocks, and he had team to prepare all those reports and presenting it to him. So yeah, he will track all his stocks.
Yeah, there was a legendary call by Lupin, I think. In the Lupin, it's still there. There's an audio probably doing the round somewhere where he takes 10 minutes to say, "You said this. This is what happened. You said this. This is what happened." How can we trust anything you say now? Because you are Titan. No, not Titan. It was Lupin. I don't think he ever blasted Titan manager. I don't think so.
Titan con call, maybe. I think something did happen.
He was there.
Yeah, hi, good evening all. So this question is with respect to the influencer part. In my opinion, probably the influencer part has been like going from a couple of years back, if I have to just pinpoint the publication houses or the news channels which have been running shows like Buy Now, Sell Tomorrow. That is also a part of influencing. And I do understand that this might not come at the behest of the companies, but there has been incident, I think 2 years back, one of the executive of was caught in insider trading, correct? So how is it different from, or how is SEBI trying to curb all of this together?
Yeah, no, that's a fantastic question. There was one point of time in my life when I was logging, like CNBC would open, I think at 9 or something, and then I thought ki whatever stocks they recommend for the day, I should just buy them and I'll actually make money. And I actually tried that out and I lost money. So I've burnt my fingers that way. And you're right, I mean, these shows, they have, names like that. They're designed to get you to keep trading. And they have not been one but two SEBI orders against two news anchors who were front running, who had first bought those stocks, then recommended them on their shows. So in that respect, yeah, I mean, the formal media is a culprit in its own way. The only thing that separates us as journalists, and especially as print journalists from influencers, is that there's something called editorial independence, where tomorrow if Deepak gives an ad in Mint, I'm not going to change my opinion on him. I mean, I have a very good opinion of him, but that is very zealously guarded. Believe it or not, it is. We do not allow marketing to dictate what we write in the editorial pages. Yes, we will carry the ads. Yes, you will see crypto ads even in newspapers, right? There were times when the front page there was this one day, I think, when the crypto industry claimed there was $1 billion worth of money invested in cryptos. But at least in Mint, I can say this, that our editorial independence is not affected.
And we are regulated. So if stock market reporters, they have to be very sharp about it. If they cannot invest in companies about the companies that they write about, and they have to make that disclosures. And so stock market reporters, they don't generally invest in all sort of stocks. So we have to follow regulations. But for influencers, no regulations as such. So that also differs from us, from them.
No, but I think it is a good point. There is an entertainment industry around stock markets. And stock markets serve that purpose also. Red, green, flashing.
And also viewers and readers. we have noticed in our page views, etc., when we do our chart beat analysis. So viewers, they are interested in stocks. So what TV channels, they show what sells. So that is where the viewers are also to be blamed. We put out so much research in doing a certain kind of stories, but nobody reads those stories. And just simple stock market, 5 stocks that will make you rich in 1 year or whatever, then those stories will perform quite well on the website. So
yeah, it's like fast food. I mean, it's great, it tastes great, but it's super unhealthy.
Yeah. America even has tried to institutionalize this by saying we'll reduce the amount of trading. So if you do more than 4 day trades per week, you have to qualify as something called a pattern day trader. You have to put $25,000 in your account before you can continue. And then you have to pass some exam and all that stuff. So, well, I hope SEBI doesn't do that, but, another exam. But yeah.
Yeah. So I wanted to ask your views on quant investing. Should one consider investing their money through SIPs in quant funds? Because in index versus mutual funds, many of us know that for the long-term index funds are good. But what are your views on quant fund? Should one consider investing in quant funds for the long term?
Neil, I don't know, or Neil or Aparajita, if you've done any research on quant.
So I've done a very detailed piece on quant mutual fund, which practices that kind of investing. And it is a black box, right? I spend a lot of time trying to figure out what they do. I talked to their CEO for a long, long time. And I still don't have a clear answer as to what, it is, they can't disclose whatever their algorithm is. But even at a higher level, I couldn't get it. But the point is it worked. It worked brilliantly in the pandemic. After the pandemic, not so much, right? 2022, quant MF was not really outperforming in any big way. So they are recent phenomena. If you go back 5-7 years, where were they, right? It's just too recent to say something conclusive on them. But on the broader concept of quant investing, I think, Deepak, you practiced some of that also?
I have.
Yeah.
I can talk about what you were saying something.
Yeah, I think this works. There are 3 categories. One, you have passive investment, then you have this quant investing, and then you have active. So it's at least better than active investment. You have that expense ratio in control in such kind of funds. So yeah, I believe this works. This definitely works.
Just as a quick thing, so there are 2 kinds of investing in a way. One is when you go by your gut conscience research, but you don't have much more than that, saying, I think this company will do good going forward, but you don't necessarily look at its past in a way. Quant is like saying, I want everything to have some kind of back-testable evidence. So you can go back and say, if I bought a stock when it announced good results, then and I held it for 3 years, how would it have done? Had I tested all the stocks that are around what I declare as good results, say 10 years ago, 9 years ago, 8 years ago, and so on, you can actually come to the conclusion of whether this is an interesting strategy to invest in. And then after that, you might just say anybody who announced whatever I call good, maybe earnings growth of 40%, some number like that, and say everybody who announces that, I'm going to buy them, regardless of whether I like the company, I like the promoter, they're in the sector, or they sell alcohol versus they don't sell. You can't make those subjective biases come into the way. That would be quant investing. I think very powerful as a concept. Index investing is a form, because indexes are just largest market cap companies, effectively. So it's the form of you can always backtest it and say, 15 years ago, what were the largest market cap companies? If I kept investing in them, would I have made a good amount of money? The answer is whatever the Nifty returns or Sensex returns are in the last 10 years, because Nifty and Sensex are essentially those. So quantitative investing, quantitative rules-based investing, I think is a very powerful framework. Relatively untested in India, and we are finding out why, because all the data is in India, data sucks for beyond 2010 or 2006 or 2005. Companies didn't even reveal standalone versus consolidated earnings. So you don't get that much data. But in the next 20 years, with ChatGPT and AI, I don't know what will happen. Everything will become like you ask ChatGPT, it'll tell you 15 reasons why to buy a stock, and quantitative back-tested reasons perhaps as well. So things are going to change, I think, for the better.
Yeah, I have a question about mutual funds. It says mutual funds hai hai, and you spend crores promoting that message. But mutual funds hai nahi hai, because there is a winner's curse, and as Neil also said, only Parag Parikh has probably been consistent that caught his fancy. So what are your views on this? I mean, is it a Russian roulette? You just have to hope you're in luck, or there's no future, you just go to passive investing and do only that. So what is the future of active mutual fund investing? And do I have to keep churning? I mean, do I have to keep managing that portfolio also? And frankly, it doesn't make sense.
No, active investing does work. It's just that the probability of you landing on that active mutual fund that turns out to be the best performer is about 50%. It's S&P, that S&P report, SPIVA report that comes out. So it's data. So active investing will work, and MFDs, mutual fund distributors, is their job to suggest those active mutual funds which have that ability to perform well in following coming years. So no, it's mutual funds sahi hai, it's true. And passive investment is only for those people who don't have time to track. Active investment में आपको fund management देखना पड़ेगा. You have to get into the Sharpe ratio, and you have to see who all are consistent performance. You will have to get into data. If you have time to put in that effort, go ahead and do that. If you don't have that time, then get into index investing. So we are not demeaning active investment. It's going to stay. But passive investments are for people who may not have time.
Neil, you have an opposing view, I can see it.
No, it's not exactly opposing. So the SPIVA report actually establishes that in the large cap category, active funds most of them have underperformed. So clearly the passive case is made out there. Now I pick Parag Parikh because it's a flexi cap fund. It can go into mid and small also. And if you just pick small cap or mid cap funds, at least statistically, active funds still are quite strong there. But again, like Aparajita said, finding that fund which is going to outperform is really, really hard. So I personally, I wouldn't get into that. I would at some point move to passive entirely.
Yes.
This is more with respect to RIA thing. So with SEBI coming with this RIA thing, now most of the time investment advisors profession is being compared with doctor. Okay. But doctors. So here, when we are talking about doctors, the fees might range from 500,000, 2,000 or something. But when we are talking about RIAs, the kind of fees possibly they would be charging to the clients, at some times it would not be affordable for them also to service a 50,000 salaried client. So why there is so much of hue and cry with respect to SEBI that RIA are the best people in this particular profession, and MFD are not, they are not considered to be so good as such. But has SEBI been thinking on those grounds that who is supposed to serve those set of people who are actually are expected to come to this particular front and they are able to pay fees? But I don't think so someone who is making an SIP of 5,000 or 10,000 would be interested in signing an agreement and paying fees on that particular. So I would just seek your views on that, and is SEBI thinking anything on that particular ground or not?
So actually, SEBI seems to by its action suggest that RIAs are for the rich, right? Because they made it so hard to become an RIA. You have to pass so many exams, you have to deal with so much compliance, that again, demand and supply, right? If the supply is just 800 something, the demand is at least 1 crore investors, of course the fees are going to be high. So what I hope, and some MFDs do a fantastic job, like I said that many times, and I fully believe that. But SEBI has to open up a path where MFDs can transition to RIA status over time. They can do so painlessly, migrate their clients, because at the heart of commissions is a bit of conflict of interest, right? Because, especially in banks, they're always going to push the highest commission product. That's my view anyway.
Yeah, that's about it, because this is precisely the hue and cry about that segment, retail investment segment. They are left out. RIAs cannot serve them because obviously they are not going to pay 20,000, 25,000. This is on the lower end RIA fees. So obviously they cannot do that. Then they get into all these. They are target of mis-selling MFDs and banks, etc. So
perhaps so you could help us. Do you have clients who are middle class as well, like not the 1 crore plus?
He's an RA.
You're an RA. Sorry.
I know RAs who charge.
So any RIAs here who would like to share something about it? That retail investors, do they come to you?
We have one.
Yeah, I mean, I'm loud enough. So there are RAs who charge 10,000 for a thing. So maybe if I can plug my own this thing, there are this flat fee RAs, right, who charge basically for the plan, right? And I am on them. And I believe that if you have a good plan, you are set for life, right? And particularly if you go with the passive funds, pretty much, you may have some changes over time, but you don't need to go to an advisor every year. So then you pay more like a kind of a one-time or at least once in 5 years kind of a fee and do that. So there are RAs who charge 10,000. That may be affordable for people. But Neil is very right. The compliances and all of that increase, and there is a 150 limit. So there is actually a limit on how much the fees can charge. I would completely agree, since an RIA, 100% with Neil, that there are many MFDs who do a great job, right? And I have seen 4 crore portfolios managed by an MFD with 40% in debt, which means that person has given up that much of commission to set this person's right. I mean, there is so much of commission to give up, right? Imagine, that much, 1.6 crore, it's in debt and you're earning less commission. But SEBI, I think you have written a lot. I don't think anybody else can add more. They have to make it a bit more affordable, and they have to get it. They have to get youngsters, right? So I am on the other side. I'm done FI, so I can charge a low fee and get away with it. A 30-year-old RIA, right? If that person is asking you to invest 50,000 a month, they should be able to invest 30,000 a month, right, for their own plan. That is unaffordable as of now, the way regulations are. Thank you for the opportunity.
On behalf of the BIC, I'd like to thank all our panelists. For the audience members who couldn't get your question in, they're here. You can accost them and get your answers out of them. But heartfelt gratitude to Neil, Aparajita, and Deepak. Thank you for this really engaging talk. Thank you and have a good night.
Thank you for coming.